Hey everybody, good evening. This is John, and welcome to the free video. It is Tuesday evening, June 9th. So I thought this was a great example of kind of what's going on in this market in terms of speculative fever. And someone had told me that they had a friend of theirs, I forgot where it was, but they were newer to trading. They're all trading Robinhood, and they're buying stocks that are $1 to $10, and they're just killing it. And this is an example of one. And talking to them, they bought in here. Up here they added more, and of course they bought more, and it's going to go to 100. And then the next day we're back down here. And of course there's Hertz. There is NKLA. The list goes on and on. But this is how these always unfold. So when you get the speculative fervor here, is defined by the volume and the percentage moves. You get these kind of moves, and you just want to be careful. So I'm assuming we don't have a lot of new Robinhood traders following us because we don't really do that kind of stuff. But if you are new, if you're doing trades like that on Robinhood, just be careful. That's how those parabolic moves end up. So if we look at Hertz, HTZ. So this is something where it's like, oh my gosh, yeah, these 10x bars will help you because you can get in, and as long as it's green and there's dots, which indicates momentum and volume, that's fine. But if it starts to get red, just kind of get out. Now the one advantage of trades like this is that with options is that you can see something like a Hertz and just say, wow, what's going on with the stock? They declared bankruptcy and they're rallying, but for some reason people are buying it. Well, what's nice about that is it drives up the implied volatility. So in terms of Hertz, it's at 605%. So here's a $4 stock. It's falling a little bit after hours, and you can come over here and sell call credit spreads. If you sell the call, that means that it's going to lose value as the stock goes down, and because usually on a $4 stock, the calls are like 2 cents. So you get a really, really good opportunity to do some trades via options in this kind of environment. Last but not least, let's take a look at the spiders. And again, on a 15-minute chart here, you can see, if you're looking to play momentum, that's great. You can see that we're definitely a little quiet today. On a daily chart, we're very, very extended from our 8 EMA, which is $314, and then our 21 EMA, which is $303. Oftentimes, as we move towards the end of the week so I'll do it like this. So it doesn't mean this pattern is going to play out exactly, but this is next Friday, monthly expiration, and then this is this Friday. Oftentimes you'll see what's called a pit bull low, where stocks may sell off and then rally into the next week. So just be a little cautious here. It would make sense that we could pull back to the 8 EMA, probably grind higher from there. And then once we get to this point, what I'm going to be looking at doing is just start putting on some hedges. The market's come a long way very quickly, and it doesn't mean that it has to correct, but to pretend that it will never correct, of course, is the same as putting our head in the sand. And so I love the idea here of being long stocks, like Tesla, and then bearish trades on something like the SPX, and it's a good combo. All right, that's what I got. You guys have a good one, and we'll see you at the next update.